Hello everyone and welcome back again to my YouTube channel. So in this episode of my YouTube videos, I'm going to be talking about 4 important things that is going to change your trading forever. So if you are someone who is just starting out with trading, or if you have been trading but you are not seeing consistent, you can't make consistent profit, or you can't grow an account, this video is for you. So when I don't know these things, I used to be losing money in the forex market back to back, and sometimes I get confused, depressed, frustrated. I wanted to even quit trading, but the moment I understood this thing, everything changed for good. So if you are new to the channel, one thing I would say is what, kindly subscribe to the channel, give a like to the video too as well, kindly share the video too. If you have anyone who is struggling to see consistency in the financial market, I think this video is for you. So what I'm going to be talking about is what I'm going to be talking about 4 important things every trader, if you are a beginner, if you are struggling to make consistent profit from the forex market, everyone should pay attention to, and it is going to change everything for you. So the first one is going to be, so four things four things so it is going to be 4 things I wish I knew when I started out my forex journey. Okay, when I started out my forex journey. So the first one is going to be, when I started out my forex journey, I wasn't paying attention to the macroeconomic event. So the macroeconomic event, okay. So the macroeconomic event, when I started out my trading, I wasn't paying attention to fundamentals. You get it? So if you are trading forex, one thing you need to understand is what, currencies are being influenced by a country. Okay, currencies are being influenced by countries, currencies are being influenced by an economy. So anything that is going on in an economy, or anything that is going on in a country, one thing you need to understand is what, it is having a direct impact on the currency we are trading. You get it? It is having a direct impact on the currency we are trading. So any economic activity that is happening in the country, it is having a direct effect or direct impact on the currency. You get it? So you need to know what is happening in the economy we are trading their currencies. Okay. So some of the major economic events we need to pay attention to is what? CPI, also known as maybe inflation data. So it's simply the increase in what? Goods and services. So if goods and services are increasing every day you go to the market, the price of goods are increasing. Every day you go to the market, the price of goods are increasing. It is going to have a direct impact or direct effect on the currency we are trading. You get it? And we are having, some of them are unemployment. Okay, some of them too are unemployment data. So it can be unemployment rate or unemployment claims. So they are all falls under what? Unemployment. Okay. And you're having GDP. So when you talk about GDP, domestic gross domestic product. Okay. So this one too is also having a direct influence or impact on the currency we are trading. Okay. So if a country, if maybe at the end of the year, the GDP of the country, okay, the goods and services produced by the country is not encouraging. It is lesser than what they did, the performance they had the previous month or the previous year. What is telling you is what? The health of the currency or the health of economy is very bad. You get it? So GDP is also what affects the currency. So if you are trading, Okay, if you are trading the financial market, either the forex market, or if you are trading maybe the stock market, you need to pay attention to what the GDP of a country. You need to pay attention to. So when I started out, I wasn't paying attention to fundamentals. So it was just recently I noticed the impact, I noticed the effects of fundamentals. Okay, so we're having a lot of economic data, but we're having major ones that you need to pay attention to. You don't have to be paying attention to all of them. Okay, you don't have to just be Adam Smith, or you don't have to be father of economics for you to be able to understand this. These are basic economics. Okay, and again, we're having like interest rates. Okay, we're having interest rates. So interest rate too is also something, or it's one thing that's also what affects the value of a currency. So if there was an upcoming interest rate to be released, it is going to affect the currency you are trading. One thing you need to understand too is what, when this news or these data are about to be released, we are having people who move the exchange rate. Okay, so we have something called exchange rate. Exchange rate. So we're having major players who move the exchange rate. So if these major players are reserved because they are waiting for this data to be released, what is going to be happening is what? The market is going to be slow because they are waiting for this data to be released. And as we, the retail trader, I'm a retail trader, you are also a retail trader. I know most of the people watching me are retail traders. We are trading $5,000, $10,000, 20,000. The quantity of currency we are trading is very small, so we don't move the exchange rate. So one thing you need to understand is what, if these major players, the major market participants, those who move the market, who move prices, are not participating in the market, you need to understand that the market is going to be movement of price is going to be slow. So when it happens, you just have to also be what, reserved, and wait for the news to be released. If these people are making decisions, okay, then you follow their path. So someone will ask, how will I be able to know these people are making decisions? After the news has been released, that is when they decide if interest rate they increase, if they hike interest rate. That is when they are also going to decide to, if they hike interest rate, what is going to happen is what, they are going to invest in such country. They are going to buy more of what, their currency. So that's what you need to understand. So these are some of what the major what economic data. So you need to pay attention. So I remember this one time when I was trading, when I was new, I was green to the financial market. There was this data that was about to be released. That was GDP. That was interest rate on the pound. So if you have been someone who have been observing the news releases, you notice that when there was an interest rate on the pound, you see big candles. I wasn't aware, and I was in this position like an innocent trader. I just started out. I was in this position, and one thing I realized is what, there was a big candle. It just what, my account came to 0 0, and I was there, and I said, "Wow, what happened?" So later, I was doing my research, and I noticed that there was news that was about to be released, and my account has already been blown. So what I did is what, lesson was learned. Okay, I learned my lesson. I learned my lesson. So from there to now, when there was an upcoming news event, what I do is what, sometimes I become disobedient and the market discipline me, but majority of the time I don't try to play with this fire. When these data are about to be released, I don't play with this fire. So we're having some of the data to include, some of them include, so retail sales. Okay, so then purchasing management index. So this ones too is also having effect, or it's also having major impact on the market. Okay, so fundamentals. So with what I was saying, the four things I wish I knew. If I knew fundamentals is very important. If fundamentals is going to help me to what, to make proper decision in the market, I would have been profitable in maybe my first year of trading. But I wasn't paying attention to them. So what happened is what, I lost a lot of money as a result of what, not paying attention to fundamentals. So one thing I'm going to advise everyone is what, pay attention to the fundamentals. Okay, so the second one is going to be buying and selling on what, buying and selling on support and resistance level. Buying buying and selling on support and resistance levels. So I call them reactional levels. So when I started out trading, I wasn't having clarity on how to identify this reactional level. So we can call them demand and supply level. So one thing you need to understand about the market is what the market is being influenced by buyers and sellers. Those are the people who what those are the major participants in the market, buyers and sellers. So if the market is not buying, it is selling. If it is not selling, it is buying. So as a trader, you need to pay attention to the levels, especially the higher time frame levels. One rule I would tell every trader to be what avoiding. You don't have to be doing these things. Don't don't buy don't take a trade or don't buy on a resistance level. Don't buy on a resistance level and don't sell on a support level. So if you are someone who has been doing this thing, then you are not going to see profitability, especially on the higher time frame, the monthly time frame levels, the weekly time frame level, the daily time frame level, the H4 levels. Don't try to what take a buy or sell on those levels. If you are buying, don't take a buy. Don't If you are taking a buy, don't make sure there was no resistance level. If you are taking a sell, don't make sure there was no support level. If you are someone who has been what overlooking, or if you are someone who has not been paying attention to these things, that is the reason why you lose a lot of time. So pay attention to these levels. Okay, so if you are taking a buy, maybe the market has given you an opportunity and there's a resistance level close to where you are taking the entry. One thing I would advise you is what don't take a buy, wait for the market, wait for a breakout, then you take the continuation of the trade. Okay, if you are taking a trade over here, let me give the scenario, let me give the example where those a resistance level. Let's say maybe you are taking a buy, this is a resistance level, and here is the candle. Okay, you see from where the candle is to this level, price is almost close. Okay, and anytime you are taking a trade, you need to factor these conditions, the spread, the charges you are going to pay on the trade. Okay, so if price is close to this level, one thing you need to understand is what the chances that price is going to break this one and close above is very low. So for you to be at the safer side, you need to wait for price to what break above this level. Okay, wait for price to break above this level and close before you what you take a position. You get it? Before you take a position, that would be best. Okay, so if you are starting out, make sure you are paying attention to the higher time frame levels, the support and resistance level, especially monthly, weekly, daily, and H4 levels. So the third one is going to be understanding market structure. Understanding market structure. So a lot of people come to the market with no idea, with no knowledge about where the market is heading to. They don't understand the direction of the market. So it's like trying to go to an unknown place, a place you have no idea, a place you have not been there before. You get it? And you don't have anyone who is going to guide you. You don't have any guide. You don't have any Google map. Nothing that is guiding your path. One thing you need to understand is what you are going to get lost. Definitely you are going to get lost. It's the same thing when it comes to the financial market, when it comes to the Forex market, when it comes to the crypto market, when it comes to the bond market. If you come to the market, especially if you are trading, you don't understand where the market is heading to. As I said earlier, we are having some major participants who are moving this market. Okay, follow their path, follow their shadow. Okay, don't try to be against them, because your volume, if you're having a huge money to move the market, that's fine. You can just move against them, go opposite of what they are doing. But if you don't have that sums of quantity of currencies, then you need to move according to their direction. So when we talk about market structure, what does it mean? Market structure is simply means what? It is how the market is behaving. It gives you a clarity on the direction of the market. You get it? So market direction help us to what? Help us to know the direction, know the direction of the market. You get it? You need to know the direction of the market. Don't come to the market blindly and just be doing a guessing work, guessing game. Maybe just you feel like it's going to buy, you buy. You feel like you're going to sell, you sell. You are not going to be seeing consistency in the market. So make sure you are paying attention to market structure. So I'll go into deep. I'll dive deep into these topics one after the other. So I'm just giving you the surface. Okay, I'm not going deep to these topics. I'll be going deep to these topics, explain it one after the other. The things you need to consider when you are taking a trade, the things you need to what on these topics, the things that you need to consider, or the things that you need to avoid when you are paying attention to these ones. You get it? So the fourth one is going to be, so let's move to the time of the day. The time of the day, that is market section or market section. So if you are trading and you don't pay attention to the time of the day, you are going to get it wrong. So with the forex market, you are having some people who move the market. So majority of them are the banks, the big institutions, the organization, the hedge funds. So we have a particular time that they mostly come to the market to transact. Okay, so let's take for example with your, if wherever you find yourself, with your local banks in your country, what time do they open the bank? So mostly I'm a Ghanaian, I'm in Ghana. So mostly the time they open the banks are around 9 o'clock or maybe 8 o'clock. That's the time the banks open. So that is the time that they make transactions. Okay. So those are the times when the market is going to move. Those are the times. So I'm not saying the market is not going to move when these people are not participating. What I'm saying is what, for you to what, get to your target early, if these people are not available, the market is not going to get your target any what moment soon. So you need to pay attention to the times that they come to the market so that they will move the market to get your target very fast. You get it? So the time of the day, market sessions, we're having active market sessions. So those are the times that you need to come to the market. So for me, for instance, taking me as a trader, the time that I trade is what, around 6 a.m. When it comes to the lending session, I trade the lending and what, the New York session. So when it comes to the lending session, I trade around 6 a.m. GMT. Okay, to when maybe around 4 p.m. GMT, I'm done for the day. Those are the times that you are going to having the lending volume, you are going to be having the New York volume. Those are the times that we see what major movement in the market, big candles. Okay, so I'm not saying you can't trade any time of the market, any time of the day you can trade. But one thing is what you need to understand is what you are going to see slow movement in the market, slow movement in price. And when those things happen, you are going to experience a lot of stop losses. So a lot of people stop get hit most of the times and they get confused. They don't understand why such things happen. The reason why it happens is because there is no what, those major participants are not in the market. That is why you are seeing slow moves. So these things that I'm talking about, paying attention to the fundamentals, that are the macroeconomic events. So the macroeconomic events can be, it can be the economic events, it can be social, it can be political, it can be geopolitical events. You get it? Those are the macroeconomic events. Anytime there was a war with the currency, the economy of the currency you are trading, make sure you are going to be what, paying attention, being to be cautious about the what you are doing. Okay, buying on support and resistance. Don't take a trade. If you are buying, don't buy on resistance. If you are selling, don't sell, don't buy below what do you call it, don't buy on a resistance, don't sell on support. Pay attention to this one too. Don't buy on resistance and don't sell on what, support. And the third one is going to be knowing the direction of the market. If you come to the market and you don't know the direction of the market, you are going to what, lose a lot in the market. And the last one is going to be the time of the day. Market sections are very, very important. So you need to pay attention. So as I said, I'll just find time and go. We will treat this topic one after the other. Okay, you will treat them one after the other. So if you are new to trading, this thing is going to save you a lot. It's going to what, it's going to just speed up your journey for you to start seeing profitability. Paying attention to this is going to what? If you are someone who has been losing in the market, paying attention to this ones is going to what? Stop the losing. Okay, it's going to stop you from losing. Okay, so paying attention to them, pay attention to them. Okay, so thank you all for having time to watch to the end of this video. If you have not subscribed, kindly do well, subscribe to the channel. And if you have not liked the video, to kindly do well, like the video. Bye to you, or see you next time.